Good morning. Happy Wednesday to you. Welcome to Simon's Trading Channel. My name's Simon. I do a daily Bitcoin price action analysis. Before we get into the juicy stuff, just remember this isn't financial advice because I'm not a financial advisor. Now, I've skipped down to the 4 hour because the weekly and the daily haven't really changed very much. And so most of the price action is on the lower time frames. As you can see here, Bitcoin is wedging itself in to a nice triangle that I've drawn on with some lines of randomness. The top being the overhead resistance, and the diagonal being just signifying the sequence of higher lows on this 4 hour time frame. To me, this looks like it may blow off top, but it doesn't matter what I think. Price will do what price does. And even if it comes down, I'll be vigilant enough to be on the right side of the trade. Because there's not much else going on with regards to price movement, I thought it'd be useful to do a video today, just a few minutes, on where I put my stop losses when I initiate a trade. They're probably the most important part of your trade, but the trade itself is made up of an entry, a stop loss, a take profit. I'll talk about a take profits in another video to keep this one nice and short. So today we're focusing on the stop loss. Really, when you enter a trade, you should more or less straight away put in a stop loss. And the reason for that is obvious. You don't want to end up on the wrong side of the price action. So I'll do one for a long and one for a short. Now, I'm looking at this section looking to take a long. So I either wait for a closure or, which I prefer to do, I put a conditional order in just above this line of resistance. And so, for example, today I put in a conditional order on my trading exchange, which is Apex, at $44,050. Hopefully, the price does what I want it to do, which is to wedge itself in a bit more and then do a breakout. That will pick up my order and then I'll be in a long trade. So pretty much straight after that, I need to establish a stop loss. The way I do my stop losses is I pick out for a long trade the most recent low. The obvious low that I can see with my eyes is here. So this would be my stop loss for a long trade. You might be asking yourself, well, why don't you have the range or overhead resistance as your stop loss? Because frequently it turns into support. And that's a very valid question. The reason I wouldn't use the range break area or support resistance line as my stop loss is it attracts wicks. Wicks are attracted to it. And so you can be on the right side of the trade, you get a wick down, takes out your stop loss, and then you're out of your trade. Hopefully you've taken some profit at that point, but you might not have, and then you've just made a loss, even though you were on the right side of the trade. So it's useful to give your trade some room to breathe by having a recent nearby low. So that's for a long. For a short, it's exactly the opposite. I chose this area because it has the same support resistance line, but in this case, it's a support line. And also because it demonstrates the premise of wicking into your support resistance line, taking out some of the stop losses. So just imagine we're going back in time. We're doing a 4-hour trade. We're on a 4-hour chart, and the price is basically going sideways. And you see that this is the support line. It's an area, right? But I'm just drawing it as a line. So I've decided, and I think I traded this. I think I did. Yeah. I mean, I can't remember. I think I did. So I put in a conditional short somewhere below the what would be here support line. Put a conditional short in. Luckily, the price came down, picked up my short. Now, if I'd had my stop loss as the support line, you can see here I would have been stopped out and I would have lost money on that trade. And what a shame, because then there was continuation to the downside and that would have given me opportunity to take some profits. We'll talk about take profit areas in another video. So what I did instead was I put my stop loss at a logical place, so a recent high. Now, it wasn't obvious where the recent high was on this section of price, so I would just pick out the wick high, and that would have kept me miles away from any wicks that probably stopped other people out of their trades. So I would have picked up a short here and would have been able to take advantage of this overall price movement down. So short and sweet. I hope that was understandable. If it wasn't, let me know and I'll try and articulate it in a more sophisticated manner. I hope you enjoyed that video. Nice, short, sharp one for today because, as I said, the actual price movement is pretty lackluster. That just reflects the declining volatility that we talked about a couple of videos ago. My feeling is it's not going to pick up anytime soon, but I just want to be the right-hand side of that price action and take advantage, take some profits, and keep doing so. So yeah, I hope you enjoyed the video. Happy Wednesday to you, and I'll catch you tomorrow.